my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. An unusual pattern type last Wednesday. It was a large bearish engulfing pattern type, but what was unusual was how it was a bearish engulfing pattern on top of the previous session, which was not only a bearish black crow, but also another bearish engulfing pattern on its own. Very strange, almost like a homing pigeon pattern, but in reverse. It was nevertheless the sixth consecutive close over the upper trend line, currently 74.27, of what I had labelled a possible descending expanding wedge pattern. That's currently between 74.27 and 68.47. Now, as you may know, I haven't been entirely happy with this pattern, hence there is a heavy dose of the word possible in front of it, even now. Well, for starters, it hasn't completed the usual requisite 5 touches combined of both trend lines. Yet leaving that aside for the moment, as well as its short life and steep downtrend angle, leaving all those aside, we still do have this pattern, which leads to 2 diametrically opposed questions. Number 1, is it a false break higher? Number 2, how high will the move be? Okay, so for question 1, well, if it was a false break, then we should have known by now, and even with last Wednesday's move lower, it does not show a strong enough nature as yet to be seen as a false break higher. For question 2, well, a primary target X will be in the 78.67 area, with a secondary and much harder to reach target X1 in the 79.46 area. These are big asks of this market, especially from what is in truth a not too good looking descending expanding wedge pattern. So what do we have above as resistances? Well, we've pierced but not yet closed over the obvious one, which is the May's high at 75.99. Then there's a congestion around the January 2020 high at 76.30, and more recent 76.35 and 76.39 highs. Meanwhile, on the downside, around the broken upper trend line, we have the combination of the 2 moving averages, the rising short medium moving average, currently 74.65, and the medium moving average, currently 74.29. This last bit brings me nicely to a recent factor which, though lagging, may help influence the bullish side. We had a golden cross 2 weeks ago, the short medium moving average up over the medium moving average. With that, I'll finish this portion. And so far today, well, an interesting open higher and a move straight up through all the recent highs to make a new high, just under the July 2019 high at 76.66. This may even very well be a statement move after the last 2 sessions' odd actions, if it is sustained. German DAX futures. Possible seminal day on Friday as a turning point. You see, it was a new high and, more importantly, a new high open, one not seen since late March. But the session ended as a possible day 2 in a 2-day separating lines pattern, closing right on the declining medium moving average, currently 14.439. And that's after the previous session ended closing just above the medium moving average. The question now is whether the market can exploit this move higher we saw on Friday, or exploit the close back on the declining medium moving average. Overhead, we still have the April highs at 14.617 and 14.623 before looking at the declining long moving average, currently at 15.054. This is yet further evidence of the market's efforts to untangle itself from a real mess of congestion below, consisting, and this is in no particular order, the upper time stroke upper trend line, currently 13.895 of the January to March bearish shift pitchfork, which was also the upper trend line of the late March to date descending expanding wedge pattern. Then there's the neckline, currently 13.971 of December 21 to February 22 head and shoulders top, plus a separate mess of resistances between 14.079 and 13.804, which includes the February 20 low at 13.821 and a 50% Fibonacci line of the October 20 to November 21 move at 13.804. Hence, this is a real mess of congestion below the market. Anyway, all these are now supports. In addition to this, and close nearby, is the 50% Fibonacci line for 2022 at 14.342, just below the medium moving average. This continues to be the first steps the market's taken in moving above the proposed April to May descending expanding wedge pattern, currently 12.613 to 13.895, which is a big move. This pattern now has a primary target X in the 15440 area and a secondary and harder to get target X1 in the 15725 area. These are big asks. Now, so far today, an interesting higher open and a move up towards Friday's high. If this carries on, then this would be the first session with a open, high, low and possible close over the declining medium moving average. And that becomes very interesting. US E-mini S&P futures. An immediate countering bearish dark cloud cover pattern on Friday, as the market once again rejected resistances overhead of the upper time, currently 41.83, of the January to March bearish Andrews pitchfork, as well as the middle time, currently 41.80, of the bearish shift pitchfork for the same move. Okay, we are from today entering the danger zone that I've spoken about for weeks now. The crossover happens tomorrow of these two tines. I'd earlier highlighted the crossover of times from these two pitchforks on Thursday 3 weeks ago as a period where one should expect, or more of the following really: volatility, a change in trend, or a reinforcement of a trend. As I previously said, this was an important time period and I highlighted it with a red circle on my daily chart. I had also drawn another red circle for the next crossover to come from these same pitchforks. This is of the upper time of the bearish Andrews and the middle time of the bearish shift pitchfork, and it will happen on the 7th of June, or tomorrow. Hence I renew my warning and what to look for. Look for volatility, either a change in trend or a reinforcement of a trend. Other than these, overhead we have the June 21 high at 41.26, as well as the recent 50% Fibonacci line resistance at 42.19. Meanwhile, below we have the congestion band 39.59 to 40.55 that try to trap the recent market. So keep a keen eye for what may happen. And so far today, a higher open and move up through the June 21 low, but not yet as far as the crossover zone. Right now we're looking at a possible counter to the counter bullish Harami for today. Thank you for listening. The short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.